Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of September the 17th, 2018. Now, to get started this week, we're going to begin where we always do, with that very important US dollar index that drives both currencies, commodities, and of course, even the global equity markets. So when we look at the dollar right now, we've come into a verified support level and we've taken a strong bounce out of this area on Friday. Now that current support level on the dollar is coming in at or about the 93.93 area. Now the upside risk here for next week for the dollar is the critical VantagePoint T-cross long, our upside pivot at 94.68. So we must clear that and again break through this channel we've been working on here for the last probably the last 3-4 weeks. We're running back and forth in a channel top that's coming in around 95.28. So we need a break below 93.80 or above 93.30 to get the dollar moving one way or the other. Now the indicators from VantagePoint are actually recovering from oversold territory, so the immediate risk is to clear through this 94.68 area, and if we can do that, we have a real shot at breaking through that top. Now, what is clearly supporting the dollar right now is weak gold prices. Any move higher inside this current verified resistance zone here, that's coming in at about 12.20. Any move towards that area, the sellers are just waiting here for it. So we're moving in a very, very tight channel here. I would like to see this break down below 11.90 per ounce. If we can do that, we should target back down 11.50, but ultimately gold is likely to move lower based around a stronger US economy, higher interest rates. None of these are positive for gold. Now with oil next week, we've got a very similar setup here. We're coming up once again to a verified resistance zone. That area comes in at or about the 71.10 area. We came right up there this week, kissed 71.10, and then we're slammed lower. Now the good thing is we've got the T-cross, again the long pivot area, 68.29, still holding in here. But if we start breaking down on oil, now that summer driving season is officially going to be coming to an end in the latter part of next week, if we push down below this 66-67 area, then we could see a bigger sell-off as demand starts to rescind for oil. So be careful of oil on longs up here. Again, we have some verified resistance zones and we have very little upside momentum, as we can see through the VantagePoint predicted RSI. Now, as we move into stocks next week, again, the equity markets have recovered off that T-cross long area here, that long pivot area from VantagePoint. Pretty strong buying. I'm just going to move this up a little bit so everybody can see this. That area of support coming in at or about the 78.71. We've taken a couple of runs down into that area and the buyers were sitting there waiting. So very good shorts and longs on the S&P 500, selling into 29.20, 29.30, but buying 28.71, staying with that primary trend is more than reasonable. Right now, we have our medium term crossing our long-term predicted difference, suggesting that at the very least, we are going to retest the all-time high and the all-time yearly high. So keep an eye on that, but right now there's still a lot of red flags out there. There's tariffs with China, political uncertainty in the US, so equities are going to remain choppy, but some very good two-way trading action. Now, as we move into our main Forex pair, the first thing we want to identify, Euro-US, probably the most heavily traded Forex pair. We've come up into this known verified resistance zone between 117.40 and 118. And as soon as we came up here and just kissed this verified resistance area, the sellers were just camped out there waiting. So the euro unlikely to make significant gains next week, but a retest back towards 117.40 can't be ruled out, providing we hold above 116. 116.07 is again, the long pivot area from VantagePoint, but the indicators here are very mixed. We have very, very limited upside momentum, suggesting we are moving lower within a defined range. And that defined range right now, guys, 117.40, and on the downside about 115.20. So the likelihood we're going to start inching our way back towards 115.20 is very, very high. Now, with US Swiss franc, significant verified support sitting down here at 96, about 96.52. So keep a very close eye on this one next week. But if the equity markets sell off, this pair will move lower with it, regardless of US dollar strength. Now, our indicators again are recovering, but they are still predominantly bearish. So I would be very mindful of 76.50, 76 or 96.50, 96.30, excuse me. If we start pushing consistently below that level, a bigger move to the downside is imminent. But if this level holds, then I would say it's very likely we're going to come back and retest the key VantagePoint pivot area at 97.39. Now, as we move into the pound dollar next week, we've broken through an immediate resistance zone here, a verified resistance zone. That area coming in at or about the 130.32. But as you can see, all of these lines that I've got drawn onto the screen are all failure points and all verified resistance. Only a sustained break of 134 will take the pressure off the immediate downside. Brexit is still a wild card. There's a number of different issues here. The Bank of England not talking about raising rates anytime soon. So when we combine all these things, once again, we're losing that upside momentum in heavily overbought territory. So if nothing else, a corrective move back to 129.65 appears imminent. But again, be careful with this pair, much like with Euro US and US Canada. We seem to put in a top or a bottom on Monday, and then Tuesday, Wednesday, Thursday, it trades the exact opposite. And then on Friday, it returns back to where it opened on Monday. If that sounded confusing, what I just said, it can be, but just think of it this way. Monday is a fake price. Tuesday, Wednesday, and Thursday are a more realistic price, and on Friday, it's just profit taking. So keep that in mind. Now, with dollar yen, once again, we're coming up to a known verified resistance zone between 113.20 and about the 112, approximately. We're going to just measure this one here. That's going to be a high around 112.15. So if the equity markets turn lower, this pair will also turn lower. So we're going to be watching stocks very, very closely. But right now we have had one failure after another below 113. So selling into the 113 area, still a reasonable play as we move into an overbought condition here. But we're going to be keeping a close eye on the VantagePoint indicators for the neural index, the predicted differences to start turning lower, so we can only think about getting short on this particular pair. Now, as we move into our three main commodity currencies for next week, US Canada has bounced off a known verified support level. That's coming in about 129.60. We have additional verified support going down to the 128.87 area. Only a sustained break of 128.87 will actually take the pressure off the top side. If oil turns lower and stocks turn lower and gold turns lower, USCAD will go higher. So on Friday, we've recovered off a very clear triple bottom here, and we're back testing the key VantagePoint 130.68 area. Now, a break of 130.68 will see this pair start to move back towards its immediate range top around 132.50. I would say that is very, very likely at this particular time, as our neural index is turning and we're moving out of the oversold condition. So if nothing else, a corrective move back towards that range top is very likely. But be careful with this pair going forward over the next few weeks, because it's headline driven based around NAFTA negotiations. If Canada and the US come to a new NAFTA agreement, the CAD's going to rally for sure. But guys, it will likely be very, very short-lived, and then the intermarkets will take back over, and this pair is ultimately likely to move higher. Now, as we move into the Aussie and New Zealand for next week, once again, we've had a very, very good rally off this verified support level down here. That's coming in at or about the 70.85 area, but 2 days in a row, we are unable to breach and close above the key VantagePoint long-term pivot area at 72.04. So we need a break of 72.04 to take the pressure off the downside. Right now, guys, there is still significant pressure to the downside on the Aussie currency. Just how many times have we heard some of the analysts and pundits say, you know, the Aussie can't go any lower, it can't go any lower, you know, it's got to go higher. Well, guys, here's the chart over the last, basically over the last year, or the last 9 to 10 months. And every time they said that, we've gone lower, including just a few weeks ago, just a week and a half ago. So, you know, nothing goes straight up and nothing goes straight down. But the reality is, it absolutely can go lower, okay? So our indicators are trying to recover, but they may very well stall right where we are now. Now, as we look at New Zealand, it's taken an even more aggressive move, but you can see that it's banging into the critical VantagePoint long-term pivot area, 65.96, and we're simply unable to break this level. So if the Aussie is going to go higher, New Zealand's going to go higher, we need stocks moving up. If stocks are moving higher, these two pairs are also moving higher. But if the stocks start to move lower, and we go into a risk-off scenario, both Aussie US and New Zealand US will move lower. So with that said, this is the Forex Weekly Outlook for the week of September the 17th, or excuse me, September the 17th, 2018.